After rising almost 600%, it seems like everyone's buying the space tickets for the Afterpay rocket. While most investors are not selling straight away because they want to make more money, it's certain that there will soon be sheeps that are going to get slaughtered, and bros from ASX bets they'll be visiting the yacht store. Hey everyone, if you're new here, welcome. If you're back for another video, welcome back. It's Mr. Swing Trade here. Today I'm going to talk about Tencent's stake in Afterpay and what it means for Afterpay's future, and whether Afterpay is in a bubble or not by looking at their revenue model, competition, and risks. I'm going to present some facts so that you guys can form your own opinion. Let's first talk about why Afterpay is soaring. So Chinese tech giant Tencent recently bought a 5% equity share in Afterpay equating to 300 million. For those that don't know who Tencent is a Chinese multinational conglomerate. They're well known for their instant messaging platform WeChat. They're also known for owning Riot Games, partial ownership in Epic Games, publishing PUBG, COD Mobile, and many other games. Let's put this investment into perspective. Tencent has a cash balance of 133 billion RMB, which equates to 27.2 billion AUD. After doing some maths, 300 million equates to 1% of Tencent's cash balance. What's not talked about a lot is Alipay has also taken a stake in Klarna, which is the Swedish buy now pay later platform backed by Commonwealth Bank. Alipay's stake in Klarna is less than 1%. Alipay has already been working with Klarna, embedding its payment platform into Alibaba-owned AliExpress to offer financing to their e-commerce website users. This leads me to the point of how will Afterpay benefit with Tencent as an investor. Is Tencent slowly trying to capture the payment sector of the West to compete with MasterCard and Visa? Or is this a lottery ticket for Afterpay to enter the Asian market? One of the most significant benefits Afterpay can expect from Tencent is the expansion into the Asian market. Currently, Afterpay is focused on the US, Australia, and UK with plans to expand to Canada. McKinsey estimates that the online market in China is valued at 2.3 trillion, which is 2.5 times bigger than the size of the US market. The millennial demographics makes up around 30% of Chinese population. Leveraging Afterpay's merchant relationships for Chinese tourists or for cross-border transactions is possible, but it's highly unlikely that Tencent would offer Afterpay leverage to its 1.2 billion WeChat customers for domestic transactions in China. There's also nothing stopping WeChat from replacing Afterpay's business model in China and making profits for themselves. Another question that arises is, will Chinese merchants accept Afterpay? Afterpay makes a compelling case that they drive extra traffic to the store, making sales that the merchant wouldn't have made. Afterpay charges merchants a 30 cents fixed transaction fee plus a commission on sales ranging from 3 to 7%, whereas a credit card will range from 0.6 to 1.5% depending on the merchant size, and below 0.25% for WeChat and Alipay. The reason why credit cards weren't popular in China amongst merchants was because it was expensive compared to cash. Merchants will have to use expensive credit card processing technology like the clunky proprietary credit card payment terminals or an extra device or dongle to accept payments. Chinese consumers have essentially no documented credit history because they've been using cash for so long, and all of the banks who would normally take on the credit card issuer role were owned and controlled by the state, who had zero incentive to push credit cards to consumers. Adoption of the credit cards was painfully slow, reaching less than 10% of the population after more than a decade. This brings us to the Chinese government. It's a known fact that China doesn't like Western companies expanding into their territory. In the past, we've seen eBay, Amazon, Groupon, and recently saw Uber trying to expand into China, all failing. However, LinkedIn and Evernote are US tech companies that have had success. In my opinion, we've recently been seeing Chinese tech firms attempting to break into the US market, with the most recent example being Huawei. I think investors of Afterpay have hyped this up too much. I also think that Tencent's Afterpay stake is one of those plays that if Afterpay does well in the UK, US, Europe, an acquisition of Afterpay isn't out of the question. It should also be noted that it's possible that Tencent is working to integrate Afterpay with their e-commerce businesses, like what Alipay has done with Klarna. Upon further research, Tencent has already launched their own buy now pay later credit card feature on WeChat. So all in all, there will be a slim chance that Afterpay will be able to expand to the Asian market. Let's have a look at the future outlook. How does Afterpay currently make money? And what they can do to increase their revenue? Afterpay currently makes 80% of their revenue from merchant fees and the rest from late payment fees. Afterpay makes money by charging merchants a commission on sales, so 30 cents plus 3 to 7% on sales, and also late fees when customers don't pay on time. $10 late fee if the payment is due but not received, and a further $7 late fee added 7 days after the payment is due if the payment is still unpaid. If customers still don't pay, Afterpay writes off both the initial loan and the fines charged. What else can Afterpay do to increase its revenue? Besides the obvious of adding more retail merchants and customers to their platform, they can increase their revenue by increasing commissions, increasing late fees, having an account keeping fee, integrating BPay and allowing customers to pay their bills, and essentially expanding into different sectors like insurance, travel, and utilities. So, what are the risks of Afterpay? The first risk of Afterpay is the increasing mountain of debt. The risk to Afterpay is when customers default and don't pay the amount due. Afterpay has taken the risk of collecting payments without recourse, giving the merchants cash. Without recourse basically means that Afterpay will be responsible for any default risk when the customer doesn't make a payment, and the merchant will have nothing to do with it. The second risk is increasing competition. It's a known fact that Afterpay has a lot of competition. Many users who are on Afterpay are most likely on another buy now pay later platform as well. I wouldn't say Afterpay has a moat, but they certainly have first movers advantage in this space. It's evident that even with increasing competition, Afterpay continues to grow at an amazing pace. The third risk is regulation. Retailers will attempt to fight off the merchant fees, which is what a majority of their revenue relies on, and or legally be allowed to pass it on to customers. Currently, small businesses and Reserve Bank of Australia are calling into the question the no surcharge rule that prevents merchants from passing on that surcharge to the customer. However, if the rule remains in place, businesses may look elsewhere to recoup the costs associated with providing buy now pay later. By increasing prices for goods and services across the board, businesses could recover the cost paid out to buy now pay later services. By in doing that, all customers, including those who do not use buy now pay later, would suffer. A fourth and unlikely risk is consumer demand. Customers making cash or credit card purchases may soon demand that the online merchants give them a 3 to 7% discount, the same amount that they pay Afterpay. If the merchant complies and everyone gets a discount, then the uniqueness of the Afterpay's business model will suffer. All these points bring me to my final opinion. I don't believe that the buy now pay later industry is in a bubble. The industry indeed does exist, and there's space for multiple players as users can use multiple buy now pay later platforms. What I see forming is a possible oligopoly where there'll be a handful of players. Once there's big players, we'll see lots of acquisitions to expand and remove competition. If they can continuously show neck-breaking revenue growth, then it can possibly justify the current stock price. However, I wouldn't be a buyer of Afterpay today until there's a significant pullback. Just remember, time and time again, Afterpay continues to prove the short is wrong.
Oh my god. I am never gonna financially recover from this.
If you guys enjoyed the video or found it helpful, please smash the thumbs up button. If you guys are interested in watching my portfolio update, then please keep watching. My portfolio is currently sitting at $65,232. My portfolio is down 2.22% this week compared to the SPY, which is down 0.9%, equating to $1,500, with the ASX down about 800, NASDAQ 200, and NYSE 500. With the Dicker Data shares that I sold last week, I used that cash to buy work and also to buy Tesla as well. Over the course of this financial year, my portfolio has returned 17.2%, compared to the SPY, which has returned 9.8%. So that equates to a total return of $11,000. Now, I'm sure there's going to be a lot more people that made a lot more money than I did over the course of this financial year, but also a lot of people that lost a lot more money than I did. So I just want to share my investment journey to help those that need it. So that wraps it up for the week. If you guys enjoyed the video, please smash the thumbs up button and also subscribe for future content as well. I'll catch you guys next week.